Alibaba reported quarterly financial results on August 15, 2024. That was a bit of a mixed bag. It had some good news for Alibaba stock investors, and it had some bad news for Alibaba stock investors. I'll point out what was good and what was bad in this video here. Also, I'll update my buy recommendation for Alibaba stock. Coming into this investor update, I had Alibaba stock rated as one of my top 25 stocks to buy this year. I'll update that recommendation following the analysis of the earnings release. There's a lot to cover, so let's get right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so Alibaba management saying that their focus on enhancing the user experience by offering quality products at attractive prices with great service led to a stabilizing market share of Taobao and Tmall Group as we return the business on the growth trajectory. They had been losing market share in these segments, so the investments they made in the business helped stabilize the business in the recent quarter. Cloud business, meanwhile, achieved positive revenue growth momentum driven by public cloud and AI-related product adoption as we continue to invest to maintain our market leadership. Alibaba's AI business is growing robustly, and it's one of the undercover AI stocks in the market today. Alibaba said that they returned significant value to shareholders at a pace higher than past quarters. They made $5.8 billion of share repurchases that included a concurrent repurchase of shares in connection with their convertible note offering. Alibaba's been generating meaningful cash flow, and they used some of that cash to buy back shares that they feel are undervalued. Alibaba, in my opinion, has been one of the most undervalued stocks in the market all year in 2024. It's one reason why I've had Alibaba stock rated as a top stock to buy, but the stock has failed to gain much momentum, even though it's been undervalued. In fact, year to date in 2024, Alibaba's stock price is up a little more than $1. It started the year at a little under $78 per share, and after the latest investor release, it's trading at $79.43 as of August 15th. So very little upside for Alibaba stock this year. They've only increased by a little more than $1, but the stock has been volatile, jumping over $84 per share at one point and falling below $70 per share at another point. So volatile, but up only $1 year to date. All right, so the good news was that Alibaba returned to revenue growth here, increased 4% year over year. The bad news, like I highlighted at the beginning of the video, there's some good and some bad. The bad news was that income from operations was down 15%. So in order to generate that revenue growth, as we discussed earlier in the video, the management team invested in some of their products and services, and those investments led to a decreasing income from operations. And also there was some accounting changes, a reversal of some stock-based compensation of the same time last year, which then made last year's profits look better. And so when you're comparing this year's profits with last year's profits that were now adjusted upward, it makes this year's profits look much worse. So cash flow from operations also decreased by 26%. So the company increased investments in strategic initiatives, and these efforts led to better consumer retention, increased purchase frequency, and positive feedback regarding the overall shopping experience. That's what you like to hear when a management team makes investments in a product or service. You'd like to hear positive feedback. You like to hear that it's working. You don't like to hear, oh, we tried this and it didn't work, and so we're doing these massive layoffs and we're doing these massive job cuts and we're going to turn things around. And so that's the type of news I don't like to hear when I'm considering a company for investment. I like to hear that, look, we tried this and it's working good. Here's the feedback we're getting. Here's why we think it's working good. And these are all good metrics to get in response to a strategic initiative. Also, during the quarter, they achieved high single-digit online GMV growth, gross merchandise value growth, and double-digit order growth year over year, driven by increases in the number of purchasers and purchase frequency. So again, great to hear that you're getting two-sided growth. You're getting a lot of new buyers, and existing buyers are buying more frequently. perfect, right? If you have a business, that's exactly what you like to see. You like to see new customers coming in, and you like to see all customers spending more. Perfect. That's what Alibaba demonstrated. And I would have liked to have seen better revenue growth from the company, better top-line revenue growth. They only demonstrated 4% year-over-year revenue growth, but it's good to see signs underlying strength in the business. All right, moving on to its cloud intelligence group, or its cloud services, they experienced growth of 6% year-over-year. And this is the more profitable part of the business. So you like to see this part of the business growing faster than the business overall. And this is where the company reports its AI business revenue. And AI-related product revenue continued to grow at triple digits year-over-year. They will continue to invest in customers and technology, particularly in AI infrastructure, to increase cloud adoption for AI and maintain our market leadership. So this part of the business is growing rapidly, and it's likely to fuel growth of the overall business, and this part of the business is more profitable. So that's good news for longer-term investors in Alibaba stock. Now, I mentioned that Alibaba stock had been one of my top 25 stocks to buy in 2024. I've had it on my list all year long, and I last updated that recommendation on July 1st. Now, to answer the question if I think it's still a top stock to buy, I want to look at its forward price to earnings ratio, which is at a forward PE of 8.450. This is close to the lowest this stock has traded for, going all the way back to late 2021. This is just about the cheapest you've been able to buy Alibaba stock in a very long time. But there are reasons for that. The company's losing market share in its online segments, and it's making strategic investments, spending more money trying to stop those losses. It's not gaining shares, just trying to stop the losses or slow the losses in that category. And then the Chinese economy, the overall macroeconomic outlook for the Chinese economy has been weak all year long in 2024, much weaker than I expected. That's why the stock has underperformed my expectations for 2024. I was expecting a better recovery in the Chinese economy in 2024, but several headwinds, including trade, economic relations, have stopped that progress. So I don't expect that macroeconomic outlook to improve in China. I think the underlying property sector is really hurting consumer demand. People are feeling strained because of how poorly the property market is performing, and other things like slowing exports and tensions between its largest trade partners. And so the consumer in China is not feeling optimistic, and that's leading them to save more. Remember, in China, the government doesn't provide as much support to the public as in other more developed countries like in the US or in Europe, where consumers, they feel relatively safe even if they lose their job. There's a big safety net in those countries. That safety net is not as strong in China. And so when consumers feel like the economy is faltering, they save a lot more. They conserve a lot more of their cash, and spending doesn't increase as much. And that's why the Chinese government relies so heavily on exports to fuel growth for that economy, because they want to attract consumers outside of the country, knowing that inside of the country, consumer spending remains troubled. So all that being said, I don't expect that to be a catalyst for Alibaba. Still, with this valuation, I still like Alibaba stock. I think it's very undervalued. I think it's very cheap, and that's why I have it rated as a top 25 stock. Still, that being said, I wouldn't be surprised if the stock doesn't catch a bid in 2024. I wouldn't be surprised if this stock doesn't catch a bid until maybe 2025. So it's one of those stocks where I feel like it's significantly undervalued, but I also feel like it's one where investors need patience, because the pop in the stock price might not happen this year, might not happen until next year, or even the year after that. So it's one of those longer term investments, but I still like the stock at current valuations. So I would reiterate that I still think it's a top stock to buy right now, and I'll update that on August 15th. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.